Everyone thinks crypto is dead. Everyone thinks the bull run is over. There is even speculation that the Bank of Japan has broken crypto and that we are now in a bear market. But what if I told you the market isn't broken? It's perfectly engineered to shake you out right before the biggest wave of liquidity in years. Today, I'm going to help calm you down, show you what's actually happening behind the scenes, and explain why liquidity, not fear, not FUD, not the 4-year cycle, will drive crypto up again, especially going into Q1 and Q2 of 2026. Section 1, the Japan carry trade. Before we get into the biggest story, we need to talk about the one thing that's blindsided everyone over the last week: the Japan carry trade. And this isn't some random macro term, it's been one of the biggest sources of global liquidity for years. But what is the carry trade? Well, for over a decade, Japan has had 0% or even negative interest rate, and a central bank, the Bank of Japan, that's let you borrow money basically for free. This created a global liquidity loop. Borrow Japanese yen at 0%, convert it to dollars, invest into higher yielding assets, including crypto. It's been one of the stealth sources of liquidity behind everything from equities to Bitcoin. So why did crypto suddenly dump? It's because Japanese yields just spiked to their highest level since 2008. Markets are now expecting a Bank of Japan rate hike. Bond investors now price a 76% chance of a rate increase. This forces the carry trade to unwind. And when the carry trade unwinds, investors sell risk assets. They buy back yen. Liquidity briefly disappears. Crypto, the easiest asset to sell, gets hit the hardest. And here's the key point. This wasn't a crypto problem. It was a liquidity shock, a temporary one. Even after the hike, Japan's rate is only 0.5%. This is not the end of global liquidity, it's just a rebalancing. Now, let's zoom out, but before we do, hit subscribe and I'll do my very best on this channel to help you build wealth with my 24 years experience as an investor. Section 2, what's actually happening to the whole market? This is the part most influencers are missing. The real problem is that global liquidity has been dead since 2022. Let's have a little look at the timeline. 2017, high liquidity, major bull run. 2019, low liquidity, everything flat. 2020 and 2021, massive liquidity, record bull run. 2022 to 2025, no liquidity, altcoins crushed. Only Bitcoin really has rallied. Personally, for me as an investor, 2025 has felt harder than 2022. But we have to remove them emotions and stick to the facts. The only liquidity keeping markets alive came from the US repo market, where banks had parked over $2.5 trillion after COVID. That money leaked into Bitcoin, not altcoins, which explains why Bitcoin has been strong. But everything else has been dead, rubbish. But here's the important part. The repo market is now at zero, completely drained, which means for the first time since 2020, the Federal Reserve, the Fed, has no spare liquidity left to quietly inject. And so they have only one choice. Section 3, some much needed good news. It's very easy to panic when markets drop. But this is the moment we need to try our best to slow down, breathe, and actually think. Bitcoin isn't falling because crypto is broken. Bitcoin is falling because liquidity is dead at the minute. And when liquidity dries up, markets always look their worst right before liquidity returns. This isn't the end. This is the turning point, in my humble opinion. Because without repo liquidity, without excess reserves, without hidden tools, the Fed has only one path forward. Cut interest rates, turn the money printers back on. Shift from quantitative tightening to quantitative easing. And here's the thing, liquidity doesn't care about fear. It doesn't care about panic. It doesn't care about charts. Liquidity is mechanical, predictable, inevitable, and it always flows back in. As you can probably tell, I'm not a financial advisor, and nothing in this video should be taken as financial advice. I'm not an expert, not even close, but I genuinely believe macro experts like Raoul Pal when they talk about how important liquidity is for crypto. Section 4, why liquidity returns in the next 6 months. This is my attempt to make you feel a bit better about crypto as we head into 2026. Let's break it down in simple steps. 1. The Fed is out of repo money. They drained $2.5 trillion over 3 years. It's gone. They can't tighten anymore. They must ease. 2, inflation is no longer the problem. Just look at weakening economic data and rising unemployment. Classic easing triggers. Just to be clear, inflation is always going to be an issue in the current financial situation, the financial system, but I'm talking here purely from a crypto point of view. 3, political pressure is coming. The next Fed chair will likely be appointed to cut rates aggressively, down to 1%, maybe even lower. This is massively bullish for risk assets. 4, liquidity has a lag. Historically, it takes maybe 6 months, and we are heading straight into that window now. This means Q1 to Q2 2026 will see the full return of liquidity. This is not a guess. This is not hope. This is how liquidity cycles work. Again, I'm not an expert, but I do have plenty of experience as an investor, and I'm doing my best to keep fully up to date with what's going on in the markets. For me and my portfolio, and also members of my school community who I genuinely care about, and who have helped me in 2025 as much as I've helped them. The link, by the way, for my school is below if you need a bit of help and support. The fact is, governments and central banks have huge debts to refinance. The money printers will get turned back on. Section 5, you're not late, you're early. So here's what I want you to take away from this little video. The Japan carry trade caused a temporary shock, nothing more. The real story is global liquidity, not the 4-year cycle. The repo market is empty. The Fed must ease. Liquidity returns in the next 6 months, in my opinion. And crypto doesn't move on fear, it moves on liquidity. Take a breath. You're early, you're positioned, and the next phase is coming faster than people realize. I've been in crypto 8 years, and it's caused me serious stress, to be honest. And my wife, friends, pretty much most of the people I know just don't get it. They don't give a toss. But I fully understand the current financial system and realize how important crypto and blockchain technology are to the future of finance. But if you are struggling, you can join hundreds of other investors in my school community. You get loads of one-to-one support, and again, see below for the link to join. That's the second time I've mentioned my school. It's because I know people need support with investing. I know how lonely it can be, and I know I can help with my experience. Summary: crypto is hard on the emotions. The volatility is hard to deal with. You put the work in and you expect high returns, like 10x or even higher. But sometimes the market has other ideas, like in 2025 when it's been very hard for crypto investors. But if you can remove the emotions and think logically, you learn about what's really going on, how the big institutions and market makers are manipulating the markets and are trying to take our hard-earned money. Now, let's say this info has resonated and you, like me, are still bullish on crypto. The problem is you're not sure when to take profits. Well, if you see below, you'll find a recent video and my latest exit strategy to give you all the info you need to take profits.